Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, January 23rd, 2018. Well, folks, take a look at JNJ, Johnson & Johnson today, getting hammered down over 4% or $6. This is a big move for this stock. This is a pharmaceutical stock, usually doesn't trade this actively today. But again, they reported earnings that were below expectations and guidance was not exactly strong. The stock is seeing a pounding because of that. Now, I want to basically go over two things. I want to go over the day trading level that we took in the intraday stock chat, which was beautiful. I'll show you exactly why I took it so you can replicate this trade in the future. And then ultimately, I want to show you where the key levels are on a swing trade basis, where if it continues to fall, you can play it as a great swing trading opportunity. So let's start out here, folks. You can see the collapse today was fast and furious, dropping all the way down, piercing $142 right here in the late morning, early afternoon session. That is where we bought it. So right at the lows of the day. You might say, how the heck did you know to buy it there? And it's honestly very, very simple. I mean, this type of thing is great because what you have to do is, as a day trader, you have to say, okay, JNJ is trading outside of its normal range. So that means you could have a good day trading opportunity because if it gets oversold, it's going to snap back very quickly. As you can see, it snapped back over $1 from this low to this high just in about 30 minutes was $1 plus bounce on the stock. The next thing you have to do is say, okay, well, I know it's going to get a bounce. It's oversold here going into lunchtime. The question is, why would you buy it at a Pierce of 42? And the answer can be found on the daily chart. So flip over to your daily chart and take a look here. See this gap right here? All right, see that gap where you kind of were chugging up, and then you had a gap, and really the stock took off? So what I want you to do is put a trend line in right here at the base of the gap, which is known as gap fill. And what you can clearly see is that the stock filled that gap. And that's exactly what we were waiting for in the intraday stock chat. It was actually over lunchtime when this trade hit. I popped on the microphone, gave it out to the chat room, and a bunch of them took the trade with me, and we ended up making great money on this trade. So obviously, this was your day trading level. We captured it. You can see on the intraday, the size of the bounce was just tremendous. If we flip back to the intraday here, look at the size of this bounce. Right up basically back to 43, from a Pierce of 42 to a break of 43 on the entire side of the bounce. Now, going back to the daily chart, you have to say to yourself, okay, well, big fall here, but one day does not make a great buying opportunity as a swing trade, in my opinion. In this market, in all fairness, almost anything dropping is a good buying opportunity. However, I still kind of consider myself cautious on the ways of falling stocks because at some point, some stocks are going to go down more than just one day, right? And the question then becomes, okay, well, where would you start looking for a bigger bounce, meaning a multi-day bounce? And there's a couple thought processes here, all right? So the first thing that I would point out is you have a pivot low here, and then you have the 200 moving average right there. You also have a former pivot high, and I usually like to find pivot highs as being huge opportunities. So you have pivot high here going back to June, July, and then August right here. And that's really what I'm going to focus on. So what you're going to see here is that you're going to take a trend line right here and notice how pivot high, and then notice how it goes through the chop here. You break out, you retest that line, and then you break higher. So my thought process is that this down here is your buying opportunity, all right? That's going to be where you're going to find a significant amount of support. And you can see it very clearly because here it was huge resistance. It hammered on it here, pulled back, hammered on it again, pulled back, and then finally the third time consolidated and broke out. On the way down, it's only hit one time. So remember how it worked on the way up. It hit 3 times before it broke. So the thought process I have is it hit once, bounced, so now it can hit again, it'll bounce, and then not until later on after that bounce will it break through, which means you have another bounce to buy. And this is kind of a symmetry methodology based in the PPT. And the PPT methodology is the methodology that we've come up with here at InTheMoneyStocks.com. And the idea here is that what happens on one side of the market or one side of a stock will often be mirrored on the other side of the stock. And again, this is just a classic example. So the thought process again is that you hit here and then you hit again. And then finally you hit it, consolidated, broke through. So you can hit it here, go up, and then you'll hit it, come down. Let's say in the next 2 weeks or 3 weeks it comes down here. It's going to hit. You'll get a nice big bounce for a swing trade hold of 3 to 5 trading days at least, maybe even over a week. and then you take your profits, and then the next time it's going to go through, most likely going to the 200 moving average. So again, the swing trade level would be right here. The price point on that is 136.85. So 136.85 would be that price point. And again, that is a very good swing trading opportunity. So it's great because in this way, you can see very clearly that you have a day trade that we took today, but then there's another level where I would consider buying it as a swing trade to profit off of. All right, guys. Bottom line is you want swing trades, come to InTheMoneyStocks.com, join the Research Center, And again, that's where I give them out live. That's where my partner gives them out live. And again, get involved, make some money. It's lots to be made out there in this market environment. I'll talk to you soon, guys. Take care.